All right, hello and welcome to One Degree Advisors, where we help families cut through the noise to make confident financial decisions. Markets have been rocking and rolling, and Alex is going to explain to us the principle of rebalancing.
Yeah, sure. So rebalancing, let's take a step back and just first answer, what is rebalancing? And the best way I like to describe it is when you build a portfolio, you're targeting certain percentages to investments, right? I want 10% in this investment, I want 15% here. And when you start, you're starting with those allocations. Now, over time, investments will perform differently and they actually drift from their initial target. So the best way I like to describe rebalancing is getting back to your original target.
Yep.
It's as simple as that. I want to get back to my original target because things drift over time. And what we're looking at here, what we did is we put together a very simple portfolio, just two different holdings. The S&P 500 ETF trust and then the bond aggregate fund. And here again, this is not a recommendation for anyone. This is just, again, for illustration purposes. But what we've done is we've built two copies of this. One copy, which is the blue line, just buys and hold. It doesn't tactically rebalance. The green line, which you can't see because it's basically underneath it, is a portfolio that gets rebalanced annually. What you're noticing here is that over a 1 year period of time, it doesn't really matter if you're rebalancing, or that's what it seems like at first. If you look at the past 10 years, what we'll notice is that the blue line, which again is the portfolio that never rebalanced, actually did pretty well. Yeah. Why is that? Well, the market basically went straight up until recent times, which was advantageous for not rebalancing, right? You basically let your winners run. But here's the thing, we know long-term markets don't always go up. So as we take a step back and look at a 20-year time horizon, now we see a major divergence here. We see the green line, which is a portfolio that rebalances annually, has greater performance over the long term. Now, why is that? Really, the main focal point should be focused on is right here, 08-09. Again, rebalancing is getting back to your target, and especially during turbulent times, rebalancing is incredibly powerful, and over recent years has become a lost art. Over the short term, it may not seem like it's making a big impact. As we just saw in the 1 year, it doesn't look like it's making a big deal. Over 20 years, it has compounding and magnified effects that can really benefit an investor in long-term performance.
Yeah, so the market environment we're in right now, when people are asking what to do,
Yep.
this is one of the simple things, is just be rebalancing back to our plan,
Exactly.
which in this case is generally shifting for a little bit from bonds into stocks.
Yep.
Now, when we were doing it as annual maintenance, we were doing the opposite beforehand,
Yeah.
which was we were shifting some from the stocks down to bonds, which helped
More
reduce
conservative,
return, or it reduced the risk
Yep.
that we were going into this period.
Yep.
And that's just regular maintenance of an investment portfolio.
Yeah.
So these are the types of things that we help our clients with. If you're looking for more advice on how to rebalance in your investment portfolio, or just generally want to talk about your investment strategy, that's what we're here for, and that's what we do for families. We'd love to talk with you.